What's up, everyone? In this video, we're going to be going over how the volatility that we are currently seeing in the stock market is only getting started. We can see that the stock market right now is bloody red. So many stocks are down, everything from Google to John Deere to Caterpillar to Microsoft to Apple. Everything is basically in the red today, and there's a lot of selling pressure going on, and we've been seeing so much volatility over the past couple weeks, and it's literally only the beginning. And I want to say this: volatility does not necessarily equal selling pressure. While we've seen a lot of volatility to the downside over the past 2 days, that does not mean that all volatility is selling volatility. A lot of times we can see giant volatility spikes to the upside, just like what we saw from March 15th to March 29th with the S&P 500. That was one of the most explosive moves to the upside that we saw with the S&P 500 in a pretty long time. So keep that in mind. But I do want to point out some very, very important events that are coming up. And of course, we have all the earnings that are coming up, like we have on the screen right here. Feel free to screenshot this if you want. We have a lot of big names reporting. Next week, we start off with Coca-Cola. Actually, what I'm going to do is I'm going to expand this a little bit. We can see Coca-Cola on Monday, Activision Blizzard. But then on Tuesday, we have Microsoft, Alphabet, which is Google, UPS, Visa. Those are like the top ones on Tuesday. On Wednesday, we have some giant reports with Facebook or Meta, PayPal, Ford, Boeing, Spotify, Teladoc, Qualcomm. Thursday, we have Apple, Amazon, Twitter, Robinhood, Roku, Intel, Caterpillar, and Southwest. Friday, we have ExxonMobil, Chevron, and a couple other ones. But we are set for a giant week next week, especially in terms of earnings. And while the market was very volatile this week, as we saw with like Netflix and Tesla and even Snapchat earnings, next week will be even more influential because we have Apple, Amazon, Facebook, Google, and Microsoft. Like, those stocks have such a large influence on the market. So if those stocks report really good earnings and blast up, the market should really benefit from that. But if the opposite happens, that can be very bad. So keep that in mind. Next week will be very important in terms of earnings, obviously, but we also have a couple other important events creeping up. And I want to talk about Victory Day with Russia. So basically, on May 9th, that is I guess you could say a Russian holiday. It's Victory Day. It dates all the way back to World War II, but some are speculating that on May 9th, there might be some crazy stuff going on between Russia and Ukraine in terms, because it's like a military holiday. So, that's just one other like black swan event to keep like on your radar, I guess you can say. Obviously, there's a lot of uncertainty between Russia and Ukraine right now, between China and Taiwan, between Elon Musk and Twitter, and inflation in the United States, and all these earnings. So there's a lot of unpredictable things going on, but at least by pointing this out, I guess it kind of softens the blow, and at least it gives you something to watch out for. So this event is going to be interesting to say the least, but keep it on your radar. May 9th is the day to watch. And then also we have some important economic data coming out for over the next couple weeks. The most important thing will be the FOMC report on May 4th. Basically, this is when Powell will decide how much he is raising rates by, or if he even is, but he's probably going to raise rates. It's what's really expected. So that's going to be important too. The FOMC report will be giant on May 4th, so we have some time for that. Also on May 6th, we have some jobs data coming out too, but those are a couple weeks down the line. But I definitely wanted to make this video to make sure everyone knows about these giant earnings reports next week. It's going to be one of the most crucial weeks in the market for the entire year, considering that the stock market is at a crucial level right now where it's tanking down. We have some stocks like Netflix just getting destroyed. And on the other hand, we have some stocks like Procter & Gamble, Walmart, and Coca-Cola holding up relatively well. But if these powerhouse companies like Apple, Microsoft, Google and some of the other ones tank down, that will be terrible, because check this out. Looking at the Market Watch tab right here, basically the bigger the box is, the more influential it is to the market. So we can see Apple, Microsoft, Google have giant boxes where some of these other companies are not as important, we can say. So keep that in mind. It's going to get volatile. It's going to get crazy. And next week will be very, very important. So keep that in mind. Besides that, I hope this video helped you guys. Remember, increasing volatility does not necessarily mean downside movement. One other thing I wanted to point out is also, like, let's say we look at stocks like Apple really quickly. If we zoom in, and I'm going to enlarge this implied volatility box, you see how this blue line is increasing a lot? For my options traders out there, that means that the market is expecting more volatility with Apple in the future. So the higher this blue line goes represents the more expensive options become. So if you're looking at stocks right now and they have high blue lines or high levels of implied volatility, you probably don't want to be buying options with them, because you're going to overpay and probably get screwed over. So check this out. If we look at Snapchat right now, Snapchat stock is down 2%. And let's say we look intraday. We can see when Snapchat reported earnings, it fell at first, popped up, and then it just did nothing. Let's take a look at Snapchat's options chain. The puts for today's expiration are down anywhere from like 60% to 99%. The calls are down anywhere from 30% to 99%, and it's skewed a little bit because it's today's expiration. But even if we go to next week's expiration, we can see that the puts are down anywhere from like 45% to 95%. The calls are down anywhere from like 13% to 97%. So it's like, don't just gamble on earnings and buy far out of the money call or put options just because Netflix tanked down. It's like, look what happened to anyone who traded anything with Snapchat. Like, even if we went out to Snapchat, like to the September expiration, like puts down 20%, calls down 20%. So don't gamble on earnings. It's probably not going to be a smart idea. If you see stocks that you like at a good level, statistically, the best thing to do is just buy and hold. But, it has to be stocks that you like. And, of course, they have to be good companies, too. But that's from beside the point. But either way, I hope you guys learned something from this video. If you did, make sure to let me know in the comments down below. And have a great weekend.